Yo, what's up, y'all? I'm back at it with another trading video. Today's episode 2. Today I wasn't able to trade because I went to work at 9. And if you look at the chart, around 9, which it's not going to show here. Okay. Anyways, like, I really. Also, I didn't wake up early. I woke up only for work. So, yeah. I got to work on that. But anyways, if you look at the hour, this hour it was bearish. The 1 hour is bearish, and on the 4 hour it was bullish. And if you look at the 1 hour time frame, we had a liquidity sweep right here. So what I did is I just basically went out and since I didn't take a trade today, I just analyzed the market like I usually would, as if I was actually trading. So I looked at the market. I saw the 1 minute. I saw the 1 hour liquidity sweep. Right here I saw the 1 hour liquidity sweep, and I just marked out. When the 1 hour, I just marked out the order block and breaker block, and the move down, then the move before the breaker structure. Then I went down to the 15-minute time frame. Then I saw a fair value gap right here, 15-minute. So then I scroll down, it's 5-minute. Then I saw another fair value gap, and then I saw price push into it. So then I went to the 1 minute time frame. And then I just basically waited. I didn't wait because this already happened. But I just waited for a breaker. I looked for a breaker structure. Then I saw the breaker structure right here. Then and this is when it happened. So then I put my long position as if I'm actually trading. And then I put my stop loss below this fair value gap, as if I'm actually trading, because the reason why I took this trade is because in the 5-minute time frame, this was fair value gap, and price pushed into it. It retraced into it, and then it went up from that. So then if I put the stop loss, put the stop loss below it, because if it pushed past it and it breaks past the fair value gap, then it invalidates my trade. Then since it was at a 1 minute, since it was at a 1 hour liquidity sweep. Since it was a 1 hour liquidity sweep, it was a higher time frame, confluence, and then order block and breaker block, and it was also a 15-minute fair value gap. I decided I was gonna have high time frame take profits. So I could have probably put it all the way up here, be greedy. But you never know. Like, you cannot be too greedy in a market like this, especially you can never ever be too greedy, because then you just lose money. So me, I could have been like, oh yeah, I would have potentially took a trade up here, but no. In reality, I play more safe. I probably would have stayed in the 5-minute time frame. Then I chose this high up here, and I could have even went higher, 15-minute time frame. And I took this higher up here. And I would have took that trade up there. And then I can leave. I don't know why I deleted it by accident. 1 minute time frame. Oh, never mind, I did not delete it. Small. Yep. And then as you see, it is a 7.1 risk to reward ratio. I would say it's pretty good. And then I trade. Let's see. Yep, I use a lot size calculator to calculate my risks. I trade the future market, the future indexes, and I trade with a $200,000 paper account, and I would have long that because everything that all these confluences were all bullish. I wanted it to go up, and then it just followed every single bullish confirmation. And I can even probably find another one. Let me see. 15-minute. Probably find another one. Right here. It took me 5 minutes, a couple seconds. I found one. Right here's the fair value gap. Boom. And then this became an inverse fair value gap right here, because this candle closed above my bearish fair value gap, and then this became a bullish fair value gap, and it closed above this one, so it becomes inverse fair value gap, and just it's just another confluence to prove that price is going to keep going up, and with just that confluence as well, you saw price keep going up. But yeah, go to 1 minute. My stop loss and take profit. So yeah, I mean, moved it. Okay, so I would have entered at 5,687. Take profit. Right there, it's 5,708. And my stop loss would have been below fair value gap, which is 5,684. Yep. I just calculated, and then I risk 1% on my account every trade, because I don't like risking more than that. And it says 1% of my account is 13 contracts. So I just calculated, and it said I would have made 14,000 on the day, and I would have only lost 2,000. Just like this is risk management. I don't try to lose more than I would win. And yeah, anything else? And yeah, I mean I could play safe. First only 6% of my account, 0.5% of my account, 6,400. But I like risking 1% of my account. So yeah, I would have made it 14,000 on the day. But I didn't take this trade, and you never know. Maybe I wouldn't have taken this trade as well. But I believe I could have taken that trade, but I was at work, so that's why I didn't take the trade. And I only take 1 or 2 trades a day, so I might have had that big win and then just not have traded for this today. And looking at the market, I could have probably found another trade. But after a big win, you don't want to be too greedy. In the market, you have to be emotionless, or you will just get consumed by the market. So after that big win, I probably would have stopped trading, especially when it's this late in the market. What time would that have taken profited? It would have been done at 15. So look at that. Basically right around where New York session closes. And yeah, I mean, yesterday I took a trade around this time, around 3 o'clock my time, and it just never goes well, just because the movement's not that well. Yeah, so that's my analysis of the market today, of what trade I could have potentially taken. Tomorrow I'm gonna try to trade. I'm gonna wake up early, get better. I need to get better at waking up. But yeah, that wraps up the video. Have a great day, guys.